Time to focus on business. Our business editor, Mike Eppel, joining us now. Mike, markets on both sides of the border opening today on a bit of a roll, much like those hockey players.
Yeah, we've had a nice rally here over the past several weeks now, Ted, coming in. Having said that, a little bit of a dip at the opening of trade this morning because yesterday it was about Greece again. As we had a holiday, they were negotiating or trying to renegotiate what Greece owes to the European Union. They've got a new government in place there, and they're pushing back against the austerity measures. They're saying that they were brought in basically to renegotiate on their outstanding debts. Things broke down very quickly. Nobody's too concerned that, Greece may or may not exit the Eurozone or the euro currency. Nevertheless, it is weighing on the market just a little bit in the early trade this morning. We're also coming in off a 5-day winning streak for the TSX. The S&P 500 on Friday hit a record, so a little profit taking put into the mix. Now, oil earlier today was at its highest level of the year, about $53 a barrel. In the past hour, it's dropped by over $1 a barrel. It's back below 51 or 52 for WTI crude. Volatility. What else can we call it at this point for oil? Interesting to note, however, that as this price for oil remains at these fairly low levels, economists are starting to put out their new projections. And from a provincial standpoint, CIBC World Markets saying this morning Alberta could put in a negative economic performance for this year, whereas central Canada, Ontario and Quebec should benefit from a low price for oil and falling gas prices, and the trade should be benefiting from a low valuation on the Canadian dollar, which this morning is at just 80 cents U.S. Shares of CP Rail on the rise this morning. Limited fallout expected, at least from the company's earnings regarding that day-and-a-half strike from the Teamsters Union. They're going to find some sort of an agreement through mediated talks on a deal. And earnings in from the new parent company of Burger King and Tim Hortons, Restaurant Brands International. They lost a lot of money, actually, in the fourth quarter of last year as they brought those two brands together in that $12 billion deal. But same-store sales are up, and they're talking this morning about expanding Burger King and Tim Hortons specifically on a global basis, which is why Burger King Holdings, or QSR, bought it in the first place. So we're watching that stock climb a little bit as well in the early trade today. Ted, back to you.
All right, good stuff. Thank you, Mike. That's our business editor, Mike Eppel. You can hear Mike on 660 News at 26 and 56 after the hour.